some, come get some. Cause where I'm from, we so big gun. And everybody knows somebody that knows somebody that knows something about it. And I want answers now. Who, what, where, and why? See, a lot of dudes like to act the fool now. Get on live, but that ain't my style. Now who he gon' get and what he gon' do? Run up on me if you want to. Hot damn pressing his homies. He's done up in front of his mama. I'll mop up the floor with him. And I kick in the door and let the phone go get him. I got fools that'll go get him. That's for him and Pooh and the dudes that run with him.
Hey, it's Soleil, and this is episode 484 of the Orange Pill Investor. And let's go, Knots. It's time to get it on. And so, as you may or may not be aware, True North got purchased by Strive, ASST. And we've been given assurances that nothing's going to change. We're allowed to talk about whatever the hell we want to talk about, as we have been talking. And so I'm going to put that to the test today. And we'll see. We'll see if they let me keep getting copyright strikes. Well, actually, I can keep my channel completely separate. But I don't know. They might be available to help me make it a little better quality or spread the word or whatever. But as it stands, I get a fucking copyright strike almost every single day based on whatever music I play. My son's a musician, so I actually told him I'd pay him some money if he'd come up with a intro music for me. So maybe I'll just switch over to that anyway, once he gets that going for me. But the reason why I think Knots will win is based on a little bit of game theory. Like, you could look at the network and say, okay, Core is 80% of the network, they're going to win. But if, E equals MC squared, M is the mass, which would be the number of users. But what is the velocity portion of the equation? And that is the cult-like fanaticism of the people in battle. And so that's why Bitcoin's going to win over fiat, because nobody really gives a fuck about fiat. The Bitcoiners are just rabid toxic maxis, and some of them are much friendlier, and they try to help their fellow humans see the light, and they'll have long drawn out conversations trying to orange pill people. But some just say fuck it, have fun staying poor, you get Bitcoin at the price you deserve, all that good shit. And, Bitcoin offers the world a chance to be, I guess, egalitarian for the first time in human history. And fiat just offers more continued rent-seeking parasitism. So it's clear to me that one side has, cares the most because they have something to care about. And if I translate that to Core versus Knots, like the upgrade V30 has some little bells and whistles, but nobody really gives a shit. Nobody really thinks that anything in Core 30 has like some amazing code that needs, is going to make Bitcoin amazing, or save Bitcoin from this or save Bitcoin from that. But the people who have come to the conclusion that Core is an actual threat to Bitcoin are absolute fanatics. And so I think the not side of the debate actually has something to care about. They think that this could be an existential threat to Bitcoin itself. And I don't think you're going to be able to convince any of them otherwise. But the people running Core and have been running Core for years, most of them really just don't give a shit. So if you've got one side that cares and the other side that doesn't, I think it's pretty clear who wins this war. That is what I'm hoping is the case. And if, we've already survived the block size wars, right? And that was like an actual fork of the network. And, we won that one. This one, Fiat is attacking Bitcoin, not on the base layer protocol, but in the mempool. So I don't know if that's like layer 1.5 or actually the second layer attack, but it's only kind of logical that they failed to co-opt Bitcoin at the base layer, so now they have to figure out another way in and try to kind of backdoor themselves into the core developers, or just wait for the principled developers to kind of fade away and allow less conservative and more well-intentioned people who want to do something. They want to build things that do cool stuff. But Bitcoin doesn't need to do cool stuff. It's already cool enough as it is. And as long as it stays decentralized and secure, as Jeff Booth likes to say in every single interview, Bitcoin wins. So I'm hoping that is the case, and that Knots ends up winning the op return wars, filter wars. What are we going to call it? All right. Enough about that. What's up, strategy dude? So, thoughts on a 10-year strategy price forecast? Okay. So, completely unscientific, back of the napkin, I suppose. I'm not really a power law guy. And it's, I would probably consider myself a Boothian Bitcoiner. And he was asked about the power law, and he said, how can you have faith in the power law model when one of the variables is the US dollar, which is a manipulated variable? I guess there's one based on gold as well, but gold is also manipulated. However, I guess I'll make several assumptions. The first assumption would be that the 4-year cycles continue. And not necessarily because I believe that they're driven by the halvings, which maybe they are, but it always just seems like there is some kind of FOMO or euphoria or something that allows bad actors to over leverage themselves, and then those, whatever that is, comes crashing down, and then it takes a full year and a half for the market to recover from whatever black swan event happens. So whether Satoshi built 4-year cycles into the code, or whether this is just kind of a natural human psychological phenomenon where it takes a couple of years to FOMO into a blow off top, and then everybody gets overextended and is leveraging in 50x at the top of of things, and then people get wrecked. Bitcoin treasury companies get wrecked. Aren't they still? Aren't people still like waiting for their Bitcoin for like from like 10 years ago from um, not FT, was it FTX? Well, no, what was before FTX? Anyway, that shit takes forever to unwind. So if I assume that there are going to be 10 years would include 2 more full cycles, but then put us at, okay, so a cycle that ends in 2029 and then 2033. Unfortunately, 2035 would put us right smack dab in the middle of the bottom of the next bear market, right? Do I have that worked out right? But if we get a pump to, if I'm talking about Bitcoin now, but if Bitcoin pumps to sub million this cycle, and then maybe gets to 1 million in 2029 or 2033, that would be a 10x from here. And if strategy does a 2x of the 10x, what is that? That would get us to 33.50, 7,600 a share. Probably higher because of S&P 500 inclusion. So let's just call it 10,000 a share. And then that would be in like 2033. And then, maybe we crash 50% from there. So 10K in 2033, followed by a collapse to 5K or 75, 7,500. They're targeting it being 2x leverage. But I'm wondering if the preferreds will be even more accretive than the convertible bonds. So it's fun to think about those things, but I don't do fair valuation models or price, like actual price targets where I try to predict this stuff. But that all seems reasonable. But it'll probably end up, what, 2 10-for-1 splits? It'll probably be back down to 100. No, of course. All right, starting from the top. I've got the 4 fairly aggressive 360s, which half the trading week is over with. I could, I'm going to reshare. I'm going to reshare without volume. Without system audio. This is the first time I'm trying this. Let me know if anything gets jacked up. Some of the people complain that the trade noise, the trade sounds, the volume on the trade bell is like blows their eardrums out. So if I wanted to, I may just leave these alone, but if I wanted to roll the strikes down to collect more of a credit, I could roll to approximately the expected move, maybe 350. Is this worth doing? Maybe I'll just do it for 2. It gives me a little bit of cash. Not enough to do much of anything with. So I guess I'll just keep it moving. Covered calls decaying a little bit. Probably be at least another week before I can roll these. Same here. All right, the IRA, what is Tesla doing? So this is interesting because it kind of looks like, so Matthew Kratter is Bitcoin University now, but he used to be Trader University, and he's got a YouTube video called When to Buy a Stock Exactly, something like that. And what he described was a stock that crashes, finds support, right? Starts to accumulate. We got higher highs and higher lows. And then there's we see that just kind of trending, right? But then there's this, and you could enter into the long position anywhere in here if you're like, okay, I see that this is turning bullish, right? However, what he suggested is there's a little bit of like sideways action, and then I don't know if this is really enough, but kind of like a little period of nothing happening, and then a gap up. And this could be earnings report, it could be anything. And I don't remember if anything in particular happened on September 11th, but maybe the Robotaxi ramp up or something. Maybe people are anticipating profits. And after this gap up is when he said, okay, this confirms that the institutional buyers that were accumulating this whole time, now there's a pretty good amount of trading volume on this gap up. Like, this is real. So now Tesla would be expected to make a run. Unfortunately, I started taking a bunch of my profits here and rotating into MSTR. And actually, let me before I move off of this. But here's the real kind of test. So all-time highs were December 18th, 2024. If this trend clears all-time highs, then it's like real price discovery. It wouldn't surprise me if Tesla doubles at that point, over however long it takes. So if the finance gods are listening and want to smile on me, maybe hold off on this pump until MSTR gets S&P 500 inclusion. That's kind of what I'm. It's kind of what I'm hoping will happen, and I think many other people are hoping will happen. But it's funny in New York last week, I was talking about that, and the person's response was, everybody's waiting for that to happen, so that's why it won't happen, which does make sense in the market. Just max pain for everyone. But yeah, that's kind of been my plan for the last year and a half. Is if people start front running strategy on the S&P 500, and then we pump to like whatever 1,000 a share or something. My But if it doesn't happen, my plan is still going to be the same. So somewhere December, January time frame, I will be rotating half of my portfolio. I would probably half to Tesla. So I'm hoping I don't miss most of what Tesla's about to do. Maybe this can just grind up slowly while strategy pumps over the next 3-4 months. That would be the best case scenario for my portfolio. I'll be happy to sacrifice like a goat or some chickens or whatever I need to do to make that happen. I did vote on my 100 shares yesterday, so that was cool. Voted to approve Elon Musk's incentive package. I just voted with the board on everything. There were like 2 or 3 things that board had no recommendations for. I think one was maybe to invest in XAI or something, and I just abstained on those. I would rather that Tesla plow all of their extra cash into Bitcoin, but I don't know if Elon's done buying, if he's done stacking or not. I guess if you're just going to keep it in cash, it kind of makes sense to invest in XAI so that you can use all of that data in your large language models. But I don't see why they have to take a stake. They can just pay for the data directly with cash and prizes or something. So anyway, tons of extrinsic value still left in this, even though I'm getting wrecked on this position. But yeah, the whole point of selling an option is to collect the theta decay, and you can't collect theta if you're constantly panic rolling. So I think this thing was worth 4,400 yesterday or the day before, or yesterday. Yeah, or the day before, I can't remember. Wait, was today Tuesday or Wednesday? What the fuck? Okay, it's Tuesday. Yesterday. So yeah, for me personally, I just sit on my hands and do nothing. And I'll probably cling to these last 100 shares regardless of what the price does. Whatever it costs me to keep rolling, I'll probably just keep rolling. But back to strategy. These are not ready to roll. Same, not ready to roll. And I already did that account. So this account, I have precious little buying power. It's like $400, $600. But I might sneak in and try to see if I can use that last little bit of buying power on some Strive. And so you should probably just assume that I'm biased because I haven't signed anything, but I'm assuming I will be an independent contractor. I don't actually work for Strive, so I could even shit on them if I wanted to. If I wanted to come out and say they suck and they're not executing well, and all of a sudden I'm bearish on them or something for some reason. But yeah, since I don't work for them, I can legally I can just say whatever I want. But you should probably assume that I'm biased since I'm affiliated. Not even the financial association. Like um, the whole time we've been doing True North, I've been getting paid in friendship, right? Like it's fun to hang out with those guys, and so really just from my personal associations with the True North folks that are on Strive's payroll, you should assume that I wouldn't. I would probably be biased and not want to fud my friends' bags. But with that being said, like none of this other stuff, I think is ready to roll. Let's take a quick peek. The Wolf one that I put on, plenty of credit, plenty of extrinsic value left here to collect. Sold for 7, still worth 6. That's not ready to. What did I just do? I think I just. Oh. That's not ready to roll. So my brother-in-law and I rolled out of Riot completely. It became too expensive for his account. And that's the problem. You know, if there's a problem with this strategy, it's the fact that your upside is limited. And so when we were selling puts on Riot at like $9-10, and then the price runs up like this, we're able to close that for a profit. Let's just go down to the history. So, you know, we sold the 14s for $77. We were able to buy the 14s back for half, but he didn't have enough buying power in his account to roll up to the 14. Or excuse me, roll up to like the 15 or whatever, 16. Because he would have to put up $1,700 worth of collateral. And so we ditched Riot completely because he could, you know, and we stuck with CLSK because it hadn't quite run up as much. So this was still generating significant premiums at a lower price point, still sitting around $14. And so we went out looking for another ticker that he could afford, and landed on Wolf, which has also been pumping. So it's always dangerous to sell a put in something that's pumping, but the prices were still reasonable. And so we went ahead and sold the 11s, which was pretty aggressive, I think. I'm sorry, no, we sold the 10s. Sorry, this one's mine that I added. We sold the 10 out to 39 days to expiration. And so 10 is a little bit safer. Like if Wolf drops down to $9 a share off of $11 highs, it's not that bad. We could turn around and sell $11 calls without fear of losing money. Now, if Wolf was to crash down to 7 or 8, that would be a little bit harder, but still probably doable. But yeah, that's the danger. So if you know, if you actually owned 100 shares of Riot, then over the, you know, year to date, you'd be up 70%. Or if you bought down here, you'd be up, what, 300%, 3x, 200%. Whereas, but you're also running the risk of, you know, if you bought it at 12, you're down 50% here. You know, whereas if you're selling cash secured puts here, you're getting more favorable entry positions and you're lowering your cost basis. So there's trade-offs for everything. But the point of me talking about that is, you might be able to afford to sell puts at 11, but when it goes up 50%, if you don't have a large enough account, then you can't, you're just kind of done for. You have to go find something else. Yeah, everything else is fine. So let's take a look. So I had done these positions. I formed a synthetic, made a little bit of money on the long call that I purchased with this, but decided to go ahead and dump it while Strive was up. And I used that opportunity to close down my covered calls at a loss. So it probably made a very small profit on that. But I was kind of looking at this, and on an extremely small account, this is like 3% return on capital for half a trading week. Now, unfortunately, I think this trades in increments of nickels. So I'm just going to go out to next week as well and make this a little bit more worth my while. But let's just say that this was for 2 weeks. 10%. This is like 11% return on capital for 2 weeks. So this is pretty ridiculous. And the reason why I didn't go out to 45 days to expiration is because I checked with Grok, and the pipe unlock should be like a month from the date that they what is it fucking called? Anyway, from like the 16th. So I think it's like October 16th is when the pipe people might be able to dump on the market. And so I could probably sell puts here and then maybe roll or sell puts here. If I sold them here, then I'd have to close them on the 16th, which is possible. But yeah, so I might get one more week out of these. But I think it becomes a little bit riskier selling puts on the 10th that expire on the 17th if the pipe unlock is the 16th. So I'd rather not have an expiration on the 17th or later if I'm just trying to squeeze some premium out of this. So we'll see. This is just a little fun stuff. And if I get assigned 100 shares at $3 or $2 or whatever, it's not the end of the world. Yeah, it is ridiculous in a good way. And back before I was even a Bitcoin, like Bitcoin Maxi, in May 2020 when I started selling options, I think I was still shitcoining even, like trying to trade in and out of Ethereum and all kinds of other bullshit to end up with more Bitcoin. And I definitely ended up with less Bitcoin, so I was not good at it. But when I started selling options, all I cared about was the premium. So I would have probably found this ticker and been like, holy shit, I can get 10% return on capital for half a trading week. That's pretty wild. Well, I'm sorry, for a week and a half. That's pretty crazy. Some of the highest premiums I ever saw was during GameStop. And while everyone else was like smashing, and buying long calls and making $1 million a day, I was getting like 20% return on capital per week selling GameStop puts. Which is kind of funny. Like, that was like the ultimate upside play, and I was doing the capped upside play. And I didn't make a bajillion dollars or anything, but I think it actually did work out in my favor. So, but yeah, this is definitely something that in my early option selling days, I would just be all over this, because if the premium was the only thing that I cared about, I wasn't going in and looking at their fundamentals and like, oh, their position to do this, that, and the other thing. I really just didn't give a shit. As long as they weren't in like bankruptcy talks, I would sell a put in that stock. If it was paying, if it was paying me 10%, even for 3 trading days, this is 4% for half a trading week. So that prorated out for a full week, that would be like 8% return on capital. So even this one is pretty sweet. I didn't go for it because since the ticks are in nickels, I wouldn't be able to get 13. I'd have to probably get a fill at 10. I mean, 10 is still a 3% return in 3 days. So it's not horrible. But you always have to wonder why the premiums are so high, and it's because there's a serious risk that, if implied vol is like 100%, then that means that this could go to double this, so 684, right? Or it could go down to 0. And not so long ago, it was like 50 cents, right? So I don't think it's going down to 50 cents, but the market is treating this as a highly volatile stock. And, I don't know what the pipe investors bought in at. Let's just say it's $1.50 or something. I'm sure I could find out. But, if they all dump, I mean, it could go down to $1 or something, which I think would be dumb for it to go down that far. And I really don't know what happens with the acquisition, because they bought Semler, and once they have all of Semler's Bitcoin on their balance sheet, I assume we just end up with one ticker. Does SMLR actually go away? I kind of think that's how that works, but and then everything's just going to get all jacked up. Yeah, I mean, I might be talking out of my ass. I need to find out how that's going to work. Does Semler just stay Semler forever? I don't think so. All right, so just basically premium whore play here. This is a ton of premium. And even if I get assigned at 3, my true cost basis would be 265. So my break even would be 265 before I would even really be losing money. All right. I think that's all I'm doing today. And we're all caught up on the chats. So we'll call it a day here. Maybe I will head down to the gym and jump in the sauna.